Good morning, traders, and happy Friday. It's 8:01 a.m. Chicago time on the 1st of September, the first day of September 2023. Welcome to September. A statistically more likely positive day than negative. This is episode number 2529. Today we have non-farm payrolls and U.S. unemployment. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's get down to it. We have our convergent trading pre-market summary sheet here. Again, jobs report released. The jobs report shows that more jobs than expected were created in the month of August. However, what's amiss? So we got 187,000 jobs versus 170,000. But what was amiss is that the unemployment rate ticked up. Unemployment softening a little bit, which is interest rate positive. We got 3.8 versus expected 3.5 prior, 3.5. And you know, the average earnings ticked down at 4.3% versus 4.4 expected, 4.4 prior. That's also interest rate positive. The response is for, as usual, it flashed down. The S&P flashed down at 23, and then it has rallied into 46. The high of the session is 46.25 so far, with a very interesting looking overnight profile. We'll talk about that in a bit. Overall, the posture is mild risk on. We're opening in a gap up after closing down and settling way lower across the board, except for, across the board. And so quite bullish stance this morning in this gap. The Chinese Caixin manufacturing PMI was higher than expected. UK nationwide housing prices lower than expected, which is positive as well. European HCOB manufacturing PMIs came in lower than expected, and then that leaves us with. You can read the rest of it. You can always get this sheet as it drops fresh and hot off the press by following twitter.com/conf trading. It drops at about 8:50 every morning. What's left for the day? It is Friday. It is Friday before a holiday. So quick reminder here that Monday is the Labor Day holiday in the US and Canada. We are off on Monday. And so this is Friday going into a long weekend, and it's definitely a day where, with non-farm payrolls going into a long weekend, it's definitely a day that you'd want to just be patient and not flip yourself into a hundred different reversals and end up with a big debit in your account. The only major thing that's left for today really is the ISM manufacturing number at 10, a half hour after the opening. Expectations 47. We do get construction spending, but that's not on the front deck currently in the current climate. We do get the S&P Global Manufacturing PMI at 945. It's an upper tier number or middle tier number, but I'm not expecting that to be dramatically off. So that's expected to be a 47 as well. So 9:45 and 10 o'clock, and then from there on out, that's basically it. And we go into a holiday weekend, the last weekend of summer for most people here in the U.S. Looking at the S&P, so we spent about 4 minutes on that. The S&P has traded 228,000 contracts in the extended trading hours. This is in line with what's expected. The inventory is 100% long. We never, excuse me one second. We never actually touched yesterday's close or settlement, we barely touched it on the reopen, but most of the or all of the volume has been above the close. Very, very long inventory. We'll see if it rebounds on the open in this kind of gap-ish environment. Yesterday's high, by the way, is around 45.39.75, something like that. So we are just a touch above yesterday's high, a couple points. So we're still opening at a gap if we remain up there, but my suspicion is we're likely to pull back. Now, let's look at yesterday. So you see there's positivity here in the metals, in commodities in general. You can see that there's some bullishness coming into commodities here. This is a pretty decent indication that this rally here is probably sustainable. And those who think that this is a dead cat bounce are likely to pay the price from a bigger picture perspective. The fact that copper's up 2% now, and we've been rallying for a few days. This is kind of a broad. It's showing a little bit of breadth to this rally. So for those of you who are short swings, just to pay attention to your positions. Here's what was expected yesterday. This is yesterday from yesterday's Trader Bite. You could see the title here. This is fresh off of YouTube. And yesterday, what I talked about is very, very probable attempt to push into the 45.35 area. That low before the overnight high in consolidation. There's a lot going on there. Expecting it to push to 45.35 turnover, break through the open, and then the expectation, if you recall, is that the overnight stat is likely to be taken out on the overnight low of, what was the overnight low? 45.23, which is the non-farm payroll low this morning. 45.23 is expected to be taken out, and I was looking for a target of 45.15. That was the primary scenario yesterday for those of you who were here. So let's take a look at what actually took place. So as I pull this in, let's get rid of these fractals just to clean things up a bit. Here's yesterday's auction. So we open up right in here in the 27. Trader Bite had it at 28. Consolidate, very sideways, a nice megaphone kind of formation here, very broad, a broadening rotation, very, very tough trading. Megaphones, just awful. And then it manages to put in the IB right here, and then it manages to push the IB from 45.38 to the high, so it got through the 35, which was put in right in here. 35 tested right in here. It pushed through by a little bit, and then boom, it starts to move lower. It gets down into the 15 right here. Takes care of where was settlement yesterday? 24. Takes care of that. Takes care of the 15, and then bounces back up. And this looks like it's pretty much done at the 15. It's found its buyers, but overall, it ends up pushing lower on the close right here on the cash close, where you see this cloud of big lots. And what we end up with is a neutral extreme down day after pushing higher. And this looks like we're putting in a swing high. So pretty high confidence that coming into today, we would find ourselves a little bit lower. I was looking for overnight tests of 45.08, 4,500. No chance, because these guys had a completely different idea. They open higher low, and it just pushes up back to VWAP, consolidate, and that becomes the base of our consolidation. And so we end up with this kind of an interesting profile here with very clear distributions, triple distribution. We're at the point of control. At the upper end of the range, lots of fuel to continue higher based on the volume profile, and you have the market kind of consolidating near highs with a poor high triple top right in here. So to me, it just looks like buying pullbacks today. We managed to get the short side right yesterday. Tough trade, I have to tell you. It's one thing to make plans, as many of you know. It's one thing to make a plan and to kind of just envision and see the market do its thing, and to almost feel. Although I don't like bringing feelings or emotions into trading, doesn't mean they don't exist. It's just I don't trade based on that. I don't trade from my gut, so to speak. I don't sit here and trade off my gut. I find that that's how I used to scalp, but I find that that's not a great way to have a sustainable edge. I know many here will probably disagree with me because they trust their gut and so on, but our gut is not designed for trading. But overall, the point being that that it's one thing to see and envision what it's very likely to do based on your experience, based on how it's rotating, based on many different factors. It's a whole other world to execute on that. So my point being, and it's not to make excuses for you or anyone, my point being, if you find that you've got the right plan, but you're just not executing it, be happy with that temporarily. It doesn't get you the results that you want, but this is a lot more than my guess, in my opinion, this is strictly an opinion, the 99% of the traders out there who are either entering trading or have been trading and haven't seen consistency and just continue to jump from one system or approach to another. The fact that you are following a process and doing your plan, in my opinion, in the long run, will yield results, hopefully for you. So even though you might still struggle with execution, and that can be worked on, execution brings a lot to the table. It brings the type of software that you have. Do you have a direct connection? Is it fast? Is it easy for you to use? Are you seeing the information properly? And then a lot of that, layer upon that, a lot of psychology, and you have an issue that is hard to overcome. But having that plan and having an outlook and a price map for the day puts you leagues ahead of everyone else. So rejoice with that effort and the results of that effort. Executing on a plan like yesterday's, which correctly looked at a very likely return to 15. We did it here together, and the market went to like 13.5 or something. What was the low? 13.5, I think, or 13.25. It managed, or no, 12.75. It managed to push down. Getting that right is a big piece of the puzzle, and now it's just about kind of seeing that to the point that your emotional capital is high enough that you're confident to just click and to be detached of the outcome. Okay, so that's my point. But overall, we're zippering here near the top. It just doesn't look weak at all. If we look at the TPO chart, same kind of action. The point of control shifting. Point of control shifting higher. Point of control shifting higher. We continue to one time frame up. The day-to-day trend is one time framing higher. So despite the idea that yesterday we would sell off, again, the market sells off to find buyers, the market rallies to find sellers, and it has not done a good job finding those sellers yet. We just don't see good action telling us that it's just exhausted. What does that look like? It looks like this. Open at the top, finish at the bottom, open at the top, test higher and finish at the bottom, or open, drop, finish at the bottom. That's basically what it would look like when the market has invited sellers in. So you can see we did a good job doing that in here. to reverse this uptrend, open low, close high, and then open high, close low, and so on and so forth. And what we have here is a market that's just not done to the upside. It's just what we see currently. If we look at this from the intraday chart perspective, all we're doing is walking back what we've done for last month. We were not able to go all the way back, but this is bringing us back to the areas we were testing before. So we've pushed to 44.75. We exceeded it to 46.25. Then next we have 50. Then we have this big area over here. Where did I put this? I thought I colored that in. Yes, right here. See that green band there? That green band is where I was expecting the market to pull back to. The green band comes to us from the 7 over here, the 10 low volume node, low volume node, low volume node, a high of 7 again, a high of 9, and so on. This area is 08 to 10 as a base, and it stopped ahead of it at 1275 to rotate higher. It's unfortunate that it did that because it sets us up for a really decent test, maybe a dip below and a strong rally. So this here leaves us with the high of 70.25, that gap high of 70.25, all the way up to 91, and that's the next big test area. Currently, the test area is 45.50, right? So we're very close to 45.50. 45.60 comes to us from July. So July 45.60 was in play, was an important area in play. If you recall, 60 right there, 65, 60, 65 presented support in this area, and we're coming right up to it. You could see the low volume node right there in the composite. This is the next big area to test. So now that we're above 90.93, the 45.60 becomes the kind of end-all, be-all area to test. And beneath that, we have that 45.28 or 26 magnet beneath us. That's this right here. So we've made it through the magnet. We traded on the other side, and now we are likely to run down the hill, just like dropping a ball at the top of a hill into a valley. We expect it to run down into 45.60 before we decide if we're going to fill in the gap or not. That's how the market narrative looks. That's how the context is. Today specifically is a buy the pullback type day. If we look at the high after the number, so this is the number right here. It splashed down into 23, and it ran up and has sat sideways, and it's formed these multiple tops here. These are very clear areas, and we don't see anything incredibly enticing up here. We don't see size. We don't see one of these dark maroon bands or whatever. We just see size popping in and out of here, and it's very, very likely to continue. Things kind of take a turn as we push through the 38, 39 area here immediately into this low volume area that we left behind from this morning's number, down into 35 right here. So as long as we're holding above this area, I am looking for pullbacks to get long, pullbacks to get long, pullbacks to get long, and that's all she wrote. So that's that. Looking at the NASDAQ, I want to show you this on the NQ. I know I'm running a little long here, but if you had a hard time with the NASDAQ yesterday, you are not alone. Again, if we look at the NQ from a big picture perspective, the NQ is relatively stronger. It finished or settled above the range, whereas the ES did not. The NQ is starting to broach that high, so the equivalent of 70 or so. It's very, very close to being up there, 15,668, and we are at 15,644 with the high of 53. The NQ is kind of making a comeback more quickly than the ES is. The target for the NQ is 15,728 to 50. I know that's a wide range, but it's also one rotation for this product. The rotations are about 20. What is the rotation on this thing? 24 currently. So it was 22 before. So not too far from starting to play the gap here. But if you look at the NQ on a rotation basis, and this is really important for me when I'm watching it, is you see how the day started. It started right at the point of control, the TPO point of control. It pushed right out. We had range extension up. That was very obvious. And then we started to get into this collision zone. You see that collision zone there? When we start to see those red dots, those bubbles there, we start to, and we're long, we start to consider scaling for risk. If we have no scale, of course, we don't want to trade a one lot and be binary, but you could see that the rotations start to take a turn. We start to put range extension lower, range extension lower, range extension higher and lower, range extension lower, then range extension higher. And what does this say? Complete and utter chop and just tearing people up. When I see the rotations, when I see one bracket over another extending down, then extending up and then extending down, hands off the mouse unless I want to scalp. This is not a structure we want to trade. And when we merge those letters together, we see after the fact that it had a bit of an excess high, not much of an excess low, but overall very Gaussian balance with the point of control, TPO point of control, pretty close to the middle of the range, volume point of control, a little bit higher. The NASDAQ was absolutely and completely in balance. And what follows balance, folks? Tell me, what follows balance? Balance is followed by imbalance, and now we have a big push higher in the NQ as it trades into the 15,649, way up there. It's way up there, and we have balance underneath us to support it. So all this volume, all these guys who sold in here to form these ticks are having to deal with the fact that we've run up, and it's still running up currently. Here's the S&P attacking that high. Anyway, that's all I wanted to cover with you. One thing I haven't done for a while that folks like and ask for me to do is this slide right here. Where are you located? Give us an idea of where you're located. Just type in your city, province, or state and country. And if you want to be contacted, or if you see someone nearby you want to contact, please share your Twitter or Instagram or whatever handle. Please do not share your phone number or email, because it'll be harvested and you'll be added to all kinds of nasty lists. So if there's someone that you see, all you have to do in the YouTube chat is type @ and start typing that person's name, and their name will populate. You can click on it and send them a message, say, hey, you wanna get together for coffee, you wanna talk trading, you wanna share a trading room, whatever it is, and then give them your Twitter or other handle. I don't know, Twitter, TikTok, Snapchat, whatever. Just for them to contact you offline. We have no facility for you to contact each other directly, but this is just a great way to build a community, get support, get some accountability, and just to be able to see who's around you. I'm in Chicago. I'm in the River North area of Chicago. It's a pleasure to meet you all and to be here with you every morning. Take care, good luck, and I'll catch you on Tuesday. Monday's a holiday. See you all Tuesday. Take care.